Traders say the high demand and poor supply characterizing Nigeria's forex market for the past few months have resulted in fairly stable rates observed in the trading days this week. And I'm joined from UBA by Ifeoma Onyejekwe. She's a fixed income trader. Thank you so much for your time on the show, Ifeoma. Now, let's understand the sentiments in the market this week.
Thank you, Kenneth, for having me. In the Treasury bill space this week, bullish reactions have trailed trading session from the commencement of this week, driving a further decline in yields. In comparison to this time last month, where yields at the belly of the Omo rate curve was around, demand has compressed rates to about 400 basis points, where it's currently trading around 6% levels, and fueled by a very liquid system, which has been above 500 billion naira from the beginning of this week and currently at 527.77 billion. Very many quotes were observed for shorter tenor bills, that is, bills equal to or less than 90 days. The longer dated maturities were well offered with very little demand interest on those bills. Bullish reactions were also observed in the NTB space, with trades concentrated at value of the curve, driven chiefly by clients' demand, particularly on the newly issued 182-day maturity. In the bond space, investor reactions have also been of a bullish nature as scarcity of good investment channels led to increased interest in the bond market, particularly for on-the-run bonds. Major interest has been for the 2050 bond, with current yield at about 12.3% levels. Investor interest has also been observed for shorter tenor bonds, such as the 2023 and the 2024 bonds, trading at about 8.40 levels. And with the market supported by a robust system liquidity, we expect investor demand to persist in the interim in both the treasury bills and bond markets, keeping in mind that an additional inflow of 155.78 billion is expected on Thursday as inflow from OMU maturities. For the money market, OBD and overnight rates closed at 2% and 2.75 levels yesterday. They are still currently at these levels today and have been at this level since last week Thursday, where there was a boost to system liquidity of about billion from treasury bills maturities. So little funding pressures on market participants have kept rates at these low levels, and no change in these rates are expected, barring any system intervention via CRR debit and until the CBN's bi-weekly retail auction on Friday. In the FX market, high demand characterizing the FX market for the past few months resulted in fairly stable rates observed in trading days this week. The INE rate was unchanged at 385.50, whereas depreciating in the cash market by 3 naira to 443.440, while surprisingly appreciating by the same amount in the transfer market to 457 from 460 naira, indicating a slight convergence of FX rates in the cash and transfer market. Rates are expected to remain stable in the FX market for the foreseeable future on account of the central bank's determination towards preventing further depreciation of the naira.
All right, Ifeoma, but I'd like to understand what we're expecting from the primary market auction calendar that for Q3. Any word on when it's coming out, and what can we expect from the PMAs?
So we have no word on the calendar. We're still expecting the calendar to be released. Because of the previous announcement that the government expects to borrow, so we expect an increase in bills and bonds offered.